The Shanghai Upgrade is successfully deployed, and that big sword of Damocles which was hanging over the head of Ethereum is pretty much gone. Reason enough to reevaluate the situation of Ethereum. So let's have a look at the following 3 points. 1. Analyze what happened now after the Shanghai Upgrade. How much was unstaked, how much sell pressure was created. 2. Have a look at the updated supply development of ETH and the possible staking returns. And 3. Perform a quick technical analysis and define the upcoming price targets. I'm Jonas, co-founder and CEO of Hoc-trade, your AI-powered trading assistant. Let's get started. First things first, none of what's said or shown in this video should be considered financial advice. Please do your own research. Now, with the activated Shanghai Upgrade, Ethereum can be unstaked by the validators. So let's have a look how much was actually unstaked already. Up until now, roughly 2 days after the Shanghai Upgrade was live, around 300,000 ETH, so around 600 million US dollar worth of ETH were withdrawn, with roughly 200,000 yesterday, the first full day after the upgrade. Given that there were roughly 18 million ETH staked before the upgrade, this represents about 1.5 to 2% of all staked ETH. Note that there is currently a queue to withdraw your ETH, and more than the 300,000 ETH has been requested to be withdrawn already. However, and this is also something which I brought up in the last video, Ethereum staking also gains a huge amount of attractiveness now that you can unstake your ETH. So let's have a look whether people also decided to stake their ETH. Indeed, on the day after the Shanghai Upgrade, Ethereum also saw a huge amount of deposits with roughly 100,000 ETH. The biggest new inflow in a long time actually. So while there was of course a large amount of unstaking happening yesterday, the day after the upgrade, half of that amount, so 100,000 of 200,000 unstaked, were also newly deposited, reducing the net effect significantly. This also mirrors itself in the price action. That huge sell-off in ETH certainly didn't happen. Actually, quite the opposite is the case. Ethereum broke through the highly important level of 2,000 US dollar. And why this level is so important, I'll outline later in the technical analysis. The most important aspect, first of all, is that, as anticipated, that huge sell-off right after the Shanghai Upgrade did not happen. And a lot of uncertainty now is eliminated. Eliminating this uncertainty, we can clearly see it in the Ethereum dominance chart. So the market share of ETH of the total crypto market, with a push through the trend line of this triangle here. This breakout is certainly a very bullish sign, and we'll see in the next days whether this technically gets the proper validation. Now, in a second step, let's have a quick look at the updated fundamentals of ETH. In the last video, we did a deep dive analysis on the supply development of ETH and analyzed this turning point from inflationary supply to deflationary supply at the beginning of this year, a couple of months after the merge. Moreover, we analyzed ETH from a price-earnings ratio and dividend yield perspective, looking at the attractiveness based on an established stock market analysis approach. ETH stood out by having a deflationary supply while at the same time paying an interest of 5% by staking it. Has that changed now? As we can see, we are currently sitting at around 2 ETH burn per minute, so 120 per hour or 2,880 per day, which at the current price roughly equals 6 million US dollar net burn per day. In the past couple of days, we have seen this number to be quite stable. With over 120 million ETH in circulation, this burn rate would imply a deflation of slightly below 1% per year. This is even a bit higher compared to the 0.2% we calculated about a month ago in the last video. However, an increased volume after the Shanghai Upgrade may have its influence on this. The second part is the staking. The staking rewards took a little hit to now to about 4.2% per annum, balancing that stronger deflation which we've just seen. Adding both effects together, we are still at a return of roughly 5%. Not bad for an asset at the forefront of a highly innovative industry. The next days will show where this number stabilizes. My best guess would be that the total effect of deflation and staking reward will continue to hover around 5% though. Before performing a technical analysis now and deriving some price targets for ETH, if you're an active trader, we are building an AI-powered trading assistant exactly for you. The AI tool analyzes millions of data points from traders and derives patterns that show significant loss or profit correlation. Then applies those patterns to your trading and checks whether you show similar behaviors. In a way, it is an advanced self-learning trading journal, sending you alerts in case you show destructive trading patterns again, such as revenge trading, overtrading, marrying your lost trade, and so on. We will release it in the next couple of days for testing. If you're interested, feel invited to join our Discord server. You'll be able to freely test it yourself. In the third and last point, let's have a look at the chart, perform a technical analysis, and derive some price targets. As said earlier, the $2,000 mark was successfully broken, which is very significant. $2,000 used to be a reversal point back in 2021 already. And more importantly, is the previous high back from August last year. From a trend definition point of view, this changes things. A bull trend is defined by a higher low and a higher high. On the daily chart, ETH produced higher lows already. The low was at $850 back in June last year, then at $1,080 in November, and at $1,350 last month. However, we didn't have a higher high yet, which would be formally required for an uptrend. Now, with the break of $2,000, which was the previous high back from August last year, we do have a new high. From a technical chart point of view, we do have pretty much a lot of space now until around $3,600, with very little resistances in between. From a bounce back to $2,000, this would be a 80% profit opportunity in Ethereum. This is now from a day swing trader point of view, not from a crypto maxi point of view. Of course, there is also something that is a little worrisome. The breakout through $2,000, for my personal preference, didn't show enough volume. When trading breakouts, I like to see high volume, as this means the bears tried hard to defend this level. However, the bulls eventually were stronger. This fight around this level creates a lot of volume and in turn will lead the bulls to defend this level again in case we see a retest. So while I keep cautious trading the breakout and retest itself, the overall chart situation for Ethereum definitely turned much more bullish, creating great opportunities and maybe together with the break of 30K in Bitcoin, announcing the new bull market. Again, I would be happy to see and discuss with you in our Discord server, so feel free to join and get an exclusive access to Hoc-trade. That was our quick overview to the updated situation about ETH after the Shanghai upgrade. If you enjoyed this video, please leave us a like and subscribe to our channel. We continue to develop lots of content around crypto and trading in general. Thank you for watching. Remember to always do your own due diligence and stay safe. Please be aware that we at Hoc-trade are no financial advisor. This video is for entertainment purpose only.